Rising default rates by the subprime borrowers, as we've been talking about, is no doubt a growing concern in the economy. The bond research firm CreditSights wrote in a report earlier this month that subprime defaults may add more than 500,000 homes to the residential real estate market. Is this realistic, and what may it mean for this already slumping housing market? John Sauro is the president of North Atlantic Mortgage Corporation, which is a mortgage banking firm, and he joins us now from Stamford, Connecticut with his own outlook. Good evening, John. Thanks for coming in.
Thank you, Connell. Good to be here.
Now, I'd like, that number, 500,000 homes added, I mean, it sounds like a lot. I mean, how significant is something like that?
Well, I just love when these companies come out with these speculative estimates just to fuel the fire within the market even more. We really don't know that it's going to be 500,000 homes. That's the first thing I would like to say about that. And how is that going to affect the market? Well, first of all, we have to understand that there are antidotes to people that are getting into trouble out there. Just because maybe their payments are going up or their interest rates are going up doesn't necessarily mean that they're going to be delinquent and be foreclosed on. There are solutions. They can refinance into other loans with lower payments. And so I don't know that 500,000 homes additionally on the market is really accurate.
The problem, all right, well, the problem with refinancing for a lot of these people is that, a year or two ago, the terms are much more favorable, right? I mean, it's more difficult to refinance yourself out of these situations, isn't it now, than it was in the past?
I don't think so. I think the terms are still favorable now. Let's face it, interest rates in general, whether it be fixed rates or adjustables, are still historically low. So if somebody needed to get out of their adjustable because it was going to readjust, they can still get into a favorable rate. Additionally, they can also get into an interest-only payment if they're worried about suffering payment shock. There are solutions. I think people really need to talk to their bank or talk to a professional that's got a lot of experience. Be proactive and get some advice before you start to realize those higher payments or higher rates. Be prepared.
Now, as we cover this and this situation gets a lot more attention, in particular in the subprime area, are you seeing people more risk averse in the types of mortgages that they want to get into and going towards what they consider safer 30-year fixed mortgages as opposed to anything that might be considered risky? Are those mortgages getting much, much less attention now?
Connell, I have to tell you that I think it's been like that for as long as I can remember. People just have embedded in their memory what their parents did, which was go out there, get yourself a 30-year fixed-rate mortgage. That's the safest cookie-cutter thing that you can do. It doesn't really make sense for everybody to do that. Some people who are living in their house for maybe 3 or 5 years, why would you want to pay a higher rate for 30 years of interest rate protection when you can get a better rate and a lower payment if you did, say, maybe a 5-year ARM? So I think it's been like that for a long time, where people just feel they have to have a fixed rate.
So you would agree that some people took on too much risk the last few years, but that doesn't mean that all mortgages that aren't a 30-year fixed mortgage are risky. Is that the point?
Absolutely. That's correct.
So what's the future hold here? I mean, what's next for the mortgage market? Do things get worse before they get better? Because just about every story we've had on housing in the last month or so has been a negative story. There were a lot of people before that trying to call a bottom, saying we're almost at the bottom, things are getting turned around. You really don't hear a lot of people talking that way anymore.
Yeah. Well, Connell, last year the flavor of the year was the real estate, the real estate bust, the bubble boom. This year it seems like it's the subprime saga, and will things get worse before they get better? Possibly. All the talk about what's happening to the subprime lenders. The thing to note here is that the subprime lenders did get very aggressive over the last few years, and they've created this market, which is in addition to an already healthy mortgage market that accounts for, I don't know, $2.5 trillion worth of mortgages each year. So it probably will get a little worse before it gets better. But you know what will probably also happen? You'll have these large banks come in, pick up these subprime lenders that had trouble, go in and reorganize, redo their underwriting matrices to be a little bit more conservative. They're still going to offer subprime mortgages out there. They're just going to be a bit more careful than they have been.
So you think somebody might, even a New Century that's had so much, we were talking about New Century before you came on, and that was the idea that somebody might come in and scoop this company up. You think that something like that might happen?
Why not? I mean, the structure is there, the staffing is there, the real estate is there. If it makes sense for somebody like a Citibank or a Wells Fargo or a Countrywide to come in and buy that company at pennies on the dollar, they've got infrastructure there. All they have to do then is go back in, reorganize, and redo the underwriting matrices to make sure that they're lending more conservatively, but they'll still do subprime.
Quick answer, because we got to go here in a minute. But would you buy a house right now? Is this a good time to buy?
Oh, gosh, it's a great time to buy. This is when you want to buy.
It's a good time to get a mortgage.
Yes, it is. It's an excellent time to do it. You want to be buying when people, just before this next run-up in real estate starts. We're going to have a healthy year. It's going to be a little shaky in the beginning, but I think it's going to be a good year overall. If you're buying a house, do it now before the prices start to go up again.
John, thanks for your viewpoint, and have a good weekend. John Sauro, president of the North Atlantic Mortgage Corporation, sharing his views tonight. Now,